Hi, everyone. We'll get started on today's session. My name is Martine Balsain, and I'm a manager of Global Corporate Governance, ESG Advisory Knowledge and Learning at IFC. First, a warm welcome to all the participants of today's workshop. We are joined by IFC clients, SBFN members, stock exchange officials, and many others who are interested in sustainability disclosure and the proposal put forward by the IFRS Foundation. Last November, the IFRS Foundation announced the establishment of the International Sustainability Standards Board, or ISSB. This is an important step in supporting sustainable finance and providing mechanisms to mobilize private capital for climate action and sustainable development. The ISSB is developing a global baseline of sustainability disclosure standards to meet investors' information needs, as recently published 2 exposure drafts focus on general disclosure and climate-related disclosure for public consultations. As a private market investor in emerging economies, IFC very much welcomes this development. A global standard for sustainability reporting to guide disclosure of ESG information will bring long-needed harmonization of reporting standards and frameworks. This will bring reliable, comparable, and consistent sustainability disclosure. And this is critical to attracting capital, especially to emerging markets. The IFRS Foundation is responding to a call from investors, companies, regulators, and stock exchanges for simplification and harmonization in sustainability reporting. And there has been a long-standing and increasing interest in sustainable finance and sustainability reporting in emerging markets. Over the years, IFC has responded to this interest by supporting the preparation of 145 codes, laws, and regulations, and over 30 scorecards on corporate governance and sustainability, all this since 2005. We have done so through our technical assistant programs, but also in collaboration with trusted networks and partners. For example, with the UN Sustainable Stock Exchanges Initiative, we are working with regulators, stock exchanges, and companies to enhance disclosure and transparency in emerging markets. And we see promising results. Several countries have launched national ESG reporting guidelines using the IFC's Disclosure and Transparency Toolkit and the UN SSE model reporting guidance. Another example is our work through the Sustainable Banking and Finance Network, SBFN, which identified a consistent gap in respect of the information and data from the financial sectors related to ESG risks and opportunities, climate risk management, and capital flows to investments and projects that have a positive environmental and social benefit. To address this gap, SBFN formed a data and disclosure working group to facilitate the development of tools and practical guidance on developing effective national frameworks. We have prepared a great session for you today to present the ISSB exposure draft on sustainability and climate-related disclosures. And we also want this session to be interactive. So there will be polling questions during the presentation. And we hope to integrate your responses in formulating our comments to the exposure drafts. Now, I'm happy to welcome our panelists. So from the IFRS Foundation, we have 2 members of the ISSB technical staff, being Sandeep Jadeja and Caroline Clark-Maxwell. We'll also be joined by Anthony Miller, who's the coordinator of the UN SSE initiative and a great partner of IFC. We also have the pleasure of having Charles Canfield, Principal Corporate Governance Officer at IFC and a colleague of mine. And we'll have a Q&A sessions that will be moderated by Tiffany Grasby from the UNSSC initiative and Relitsa Germanova, a corporate governance lead and corporate governance officer and lead of our disclosure and transparency program at IFC, and also a dear colleague of mine. To conclude, just some housekeeping items. Please feel free to introduce yourself in the chat box. So just say your name, company you work with, maybe the country where you're joining this call. We'll also be monitoring the Q&A box throughout the session. So please share your questions at any time. And also the session is being recorded and will be shared after. So now over to you, Anthony.
Thank you very much for that introduction, Martine. I will keep my comments short because we have a lot of material to go through today, and we're very privileged to have with us these experts from the IFRS Foundation's brand new International Sustainability Standards Board. I just wanted to confine my comments to all of our audience. I think many of you may realize the significance of this new standard, and that's why you're tuning in for this webinar. But just to restate that we really sit at a historic moment. Having worked in this space for about 20 years, we have in the past had a lot of feedback from report preparers that they were confused about fragmentation in the market, about different standards, and so on. With the formation of the IFRS's new International Sustainability Standards Board, we are seeing a lot of consolidation between standards and instruments, and it's being backed up by the strength and global credibility of the IFRS Foundation. So this is really a new era. It's a new beginning. Everyone on this call will have opportunities to comment on the draft standards that the IFRS has produced, and we'll hear more from IFRS about how you can do that. But it's important that once these become standards, and they're expected to be officially approved by the end of this year, if we're lucky, and then so that people will be using these possibly next year or the year after to start preparing reports. So it's very important that we learn about these things, but also that we understand that this is a major milestone, that going forward, these are going to be really leading mainstream standards that are adopted around the globe. So we really appreciate everybody joining us today, and we think this is a great opportunity for you to get a head start on understanding these brand new standards. So with that introduction, I'd like to go to our first guest speaker, Sundeep. Thank you for joining us. The floor is yours. Please walk us through one of the standard. You're covering climate or social?
Brilliant. Thank you very much, Anthony. I'll be covering general requirements, and thank you very much for having me.
Thanks a lot.
Thank you. I'm just pause a moment whilst Caroline pulls up the slides. Very briefly, before I begin by diving into the general requirements exposure draft, just a very quick overview of the IFRS Foundation, just provide a bit more of an introduction to the standards. Martin's done a fantastic job already. So the IFRS Foundation, as you're hopefully aware of, is an organisation that seeks to bring transparency, accountability and efficiency to financial markets around the world. And we've done that historically through the IFRS accounting standards via the International Accounting Standards Board. However, as Martin's flagged already, the ISSB, the International Sustainability Standards Board, was established in November 2021 to develop international sustainability disclosure standards as well. So what is the focus of the ISSB? It is to develop a global baseline of sustainability disclosures, focusing on meeting the information needs of investors. And the hope is that the standards we will develop and publish hopefully by the end of this year will be a starting point for jurisdictions, if they wish to and seek to, build upon by adding on their own requirements if required and needed by certain jurisdictions, targeting perhaps a wider group of stakeholders. So our focus is on investors. Other jurisdictions in time may seek to build on our requirements by providing additional requirements, jurisdictional requirements for a wider group of stakeholders. If you go to the next slide, just kind of visualize how we're thinking about it and how this all kind of fits in. So on the bottom left and middle section of this box, the IFRS, that's where the IFRS Foundation sits. So we've got financial reporting, which is kind of very much in practice today, and reporting for investors. Sustainability with financial disclosures will all add to this, but by seeking reporting on sustainability related matters, which may reasonably erode or create enterprise value over the short, medium, and long term. And beyond that, we have kind of broader sustainability reporting for multi-stakeholder focus, which jurisdictions and the likes of GRI can build upon or will build upon. So kind of this all sits together, it ultimately kind of fits together, but the ISSB focus is very much kind of on the financial reporting side and sustainability related financial disclosure, the investor focus side of sustainability reporting. So with that in mind, as has already been mentioned, we've got 2 exposure drafts out for consultation at this very moment in time. The general requirements exposure draft and the climate exposure draft. I'll be covering the general requirements exposure draft to begin with, and my colleague Caroline will thereupon cover the climate exposure draft. So with that, let's move on to the first exposure draft, which is the general requirements. If you're familiar with financial reporting, to us, this is very much kind of the equivalent of IAS 1. It sets the scene, it kind of provides a general high-level requirement under the proposed sustainability disclosure standards that have been developed. And that requirement is very much for companies to provide material information on all significant sustainability-related risks and opportunities necessary to assess enterprise value from an investor's perspective. Other IFRS sustainability disclosure standards will set out specific disclosure requirements, the first, of course, being the climate standard. And in the absence of sustainability disclosure standards for certain topics, such as, say, water, social matters, etc., which in time may be developed by the ISSB, this standard also points to other standards and frameworks for a preparer to consider when seeking to hit this requirement to provide material information on all significant sustainability-related risks and opportunities. On the next slide, we see how this kind of all fits together at this very point in time. So the general requirement standards kind of sets out the overall requirements. Underneath that, additional standards will be developed. The first, as I said, the climate standard, which provides specific thematic and cross-industry requirements for that sustainability-related risk or opportunity, as well as providing industry-specific requirements on that matter as well. So, for example, in the climate standard, there are specific industry-based climate disclosure requirements to be disclosed upon where considered material. Now, this is all kind of required to be disclosed under a core content structure that hopefully is familiar to some of you, which is very much in line with the TCFD recommendations. So when disclosing on sustainability-related risks and opportunities, we're expecting disclosures around governance, strategy, risk management, metrics, and targets. Again, to reiterate, the general requirements provides kind of the high-level general kind of high-level requirements under each of these four content areas, and then other specific standards will provide kind of more nuanced requirements. For example, the climate standard provides nuanced requirements on the disclosure in relation to climate around strategy or metrics and targets, etc. If you move on to the next slide, which can reiterate some of what I've said, the expectation is that information that is provided by companies should enable assessment of the effects of sustainability-related risks and opportunity on a company's enterprise value, basically the valuation of a company, so that investors can determine what potential impacts or existing impacts that sustainability-related risks and opportunities may have. The focus is very much on significant sustainability-related risks and opportunities, and we use the term significant to try and ascertain those risks and opportunities that a company has identified as being very pertinent for it. So we're not asking for each and every single risk and opportunity related to sustainability to be considered and disclosed upon. It's really those matters which are considered particularly significant for that entity or that company. Now, just to be very clear, the information that should be disclosed upon includes the impacts of the company on people, the environment, and the planet if they affect the assessment of enterprise value. So far as an impact on people, planet, environment has an impact in return on the company, those are captured by these standards. And ultimately, information should be disclosed upon that is material for that company, i.e. that information in line with financial reporting that could reasonably influence decisions that an investor would make, in this case, when assessing enterprise value. If you move on to the next slide, which kind of highlights a couple of the key features of the standard. So first is an emphasis on consistency and connection between financial statements and sustainability reporting. So we're requiring companies to explain the linkages between sustainability-related financial disclosures, the narrative reporting, and linkages with financial statements. And where there are assumptions used in sustainability disclosures, those assumptions should be consistent with assumptions used when developing the financial statements. We're also proposing that companies should be disclosing the sustainability disclosures at the same time as the financial statements. And this is very much so that investors, users of this information are provided this information in a timely manner. And in order to facilitate application in different jurisdictions, we're not providing a specific location where this information should be disclosed, but rather we're using the term general purpose financial reporting. So this reporting should be included alongside the financial statements, depending on the requirements within a jurisdiction. So in certain jurisdictions, that might mean it will be in the same report as a financial statement. In other jurisdictions, it may be in a separate report, but alongside and part of the broader package of corporate reporting that is provided to investors. So we allow for that flexibility. Touching back on this kind of building blocks perspective, we allow for additional information that may be required under jurisdictional requirements, other requirements, to be provided alongside information under ISSB standards, as long as it doesn't obscure any information that is required under the ISSB standards. And then if you move on to the final slide here, and again, this kind of goes into a bit more detail and touches on something I've already mentioned. So from a preparer's perspective, when seeking to identify sustainability-related risks and opportunities, and then seeking to identify relevant disclosures that should be provided in reporting, the starting point is a general requirement standard, where it often states that disclose material information about all significant sustainability-related risks and opportunities. The preparer will then look to any specific IFRS sustainability disclosure standards which are relevant to material. So for example, if climate is identified as being potentially significant and therefore disclosures required upon that, to look to the climate standard to identify climate-related risks and opportunities and relevant disclosures. However, in the absence of a sustainability disclosure standard, we flag 4 sources of guidance for a preparer to consider. These are the industry-based disclosure topics identified in the SASB standards, the ISSB's non-mandatory guidance, including CDSB framework application guidance for social, water, and biodiversity disclosures. We also direct preparers to other standards, provided that they are designed to meet the information needs of investors. And we also direct preparers to practices of peer companies in the same industries and geographies. And alongside the standard, we've also published a draft illustrative guidance to illustrate how a company can use the SASB standards and CDSB framework application guidance to identify disclosures about significant sustainability-related risks and opportunities when seeking to develop these disclosures. So that's a very quick tour of the general requirement exposure draft. We could go into a lot more detail here, but I'll pause and see if there are any questions from our audience today.
Thank you very much, Sandeep, for this overview of the general requirement standard, which creates an umbrella of the disclosure requirements that will apply across all of the ISSB forthcoming sustainability topic-specific standards, and will help us to facilitate an apples-to-apple comparison for investors. So we are going to start the Q&As with a couple of polling questions for you to fill in, and also feel free to pose the questions for Sandeep in the chat box or in the Q&A session as well. So we are looking currently in what aspects of the ISSB exposure drafts do you feel has the most value, and we are feeling pretty strong that the audience is feeling pretty strong that it builds on the same 4 pillars as the TCFD framework. So here are the results that we are sharing. So and then it consolidates some of the major standards and framework as well, and that it's accounting agnostic as well. So maybe Sandeep, while we are preparing for the next polling, you can share a little bit how you are working with all the current reporting frameworks and standards. What are the plans for aligning all of this for the preparers of the reports to be prepared?
Sure, thank you. So the first point is, in developing these standards, we very much looked at, we built upon existing standards. So I come from the organisation is CDSP, so CDSP framework was one starting point, and equally also a starting point for TCFE recommendations. The TCFE recommendations, as is coming through in this polling, is kind of a clear starting point for us, and we've again intentionally sought to build upon that, something that preparers are already kind of very familiar with. We're utilising kind of due processes that these frameworks, and as well as the SASB standards, have gone through, and so there is already a general buy-in to a large extent within these standards. At the same time, and I've seen this kind of a couple of questions on this already around, there are other developments in place, especially jurisdictional developments, such as the SSE's kind of proposals on climate disclosures. And so kind of fundamentally something we are in kind of very close contact with these different jurisdictions. We have kind of a jurisdictional working group as well. From our perspective, as I kind of hopefully set out, the expectation is that the ISSB's standards will provide a baseline. So kind of all companies, all jurisdictions will hopefully implement this. And so at a fundamental level, all companies will be providing a certain level of information consistently. And thereupon, certain jurisdictions, EU, the US, may want certain jurisdiction-specific requirements that they can build upon. Just one note as well, in relation to kind of financial statements perspective, that will continue to remain the remit of the IASB. So anything that the ISSB has proposed in these disclosure standards, there will not be a direct impact on the financial statements reporting. But nonetheless, we understand there is more work for us to do as a wider organisation, as the IFRS Foundation, around the connectivity between the ISSB and IASB, and the connectivity between sustainability-related financial reporting and kind of traditional financial reporting. So that's something that we will, we'll have to figure out in due course. But kind of this is where we are at this point in time.
Yes, thank you, Sandeep. So we will be getting a few questions in the chat box as well. Some of them focus on, given the need to report at the same time as the financial statement, have you had any feedback from CFOs regarding the manageability of this? And somewhat related, would you expect IFRS to adopt a financial statement requirement, such as being proposed in the SEC as well? And you already talked and addressed about the link between the several standards. That's something that everybody's very interested in.
Sure. So on that first one, it's a really big one, and something we're kind of very switched on around kind of the proportionality, not just around timing, but also some kind of breadth of information that we are seeking companies to report on. So in relation specifically to the requirements, proposed requirements to report at the same time as financial statements, we've had, I think, mixed feedback. I think that where companies are well resourced, I think, and are already preparing sustainability reports, something that they already clued upon, especially kind of TCFE reporting, etc. It's something they probably can build upon and do, but there's a stark reality, especially for kind of SMEs, those companies in economies where sustainability reporting isn't the norm, that this will be a challenge. At this point, we don't necessarily have an answer in terms of how we're going to address this. Our starting point is very much around timely information, and so why we've got this proposal at this point in time. But it will be something that the ISSB board will have to consider in its deliberations in the next 6 months to figure out kind of what the right point is, because it will pose a challenge, admittedly, for certain companies, for sure.
Yes, thank you very much, Sandeep, and that's why we are making this webinar for emerging market companies. And we are launching the second poll question, which focus on the which aspects of the ISSB exposure drafts do you feel we will require some adjustments or additional guidance, particularly for emerging market companies. We already got a few questions about SMEs and smaller companies, so we'll give you some minutes to include that. There was a question, Sandeep, about how to fit the ISO industry standards, because you're going to industry classification, which is extremely useful and helpful. There was a few questions about the role of banks, and that in IFC is usually the sector we invest or start to invest first. So if you can tell us a little bit more about that.
Sure. So starting with the ISO industry standards, and admittedly, I may not have the kind of perfect answer for this, but we're seeking to embed the SASB disclosure standards, which are kind of industry-specific standards. Now, as I understand, when developing those standards, they look at existing practices, existing kind of standards. So one of the starting points for them will be the ISO industry standards, as I understand. Nevertheless, in bringing the SASB standards into the kind of the ISSB's kind of program, there will need to be further consideration of work around other existing standards like the ISO, and whether kind of any adjustments need to be made to the SASB standards. So I think that's a bit of work in progress. But I'm actually just going to pass to Caroline, who's a bit closer to that one as well.
Yeah, thank you, Sandeep. So speaking in terms of the climate standard, we are currently in dialogue with ISO for relevant standards. And so, as Sandeep says, I can't give a perfect answer, but it's certainly something we're very aware of. We see it as an important part of the building block or the global baseline, as it were, because it is something we see that the industry is using. And so, hopefully, we can be able to provide more detail about that, in the coming weeks.
Thank you, Sandeep and Caroline, and I did share the results of the poll. So it looks like the guidance for implementation, which is not what traditionally standard setters go into, but that's what at the moment the market that says it's needed, followed by the adaptability for SMEs. And then the definition of materiality and the link between the debate between single and double materiality. And maybe you can give us a little bit of an overview how the two fit together and how preparers can start thinking about that, because in light of your cooperation and work programs alignment with the GRI, with the Global Reporting Initiative, and your efforts in this area.
Sure. So just to comment on the poll, it's really interesting. Actually, it's not admittedly anything new. So we've heard from much of the outreach we've done so far that preparers want more guidance on implementation. So it is something definitely the board would have to think further about. And as I've already kind of touched on, sort of adaptability for SMEs is something that's kind of very much on our mind as well, and one we need to do more thinking on. On the kind of double materiality impact side of things, a really important point, we do have a memorandum of understanding with GRI. We are in close dialogue with them. As I've kind of sought to explain earlier on, kind of where we sit is very much kind of the implications of sustainability risks and opportunities on a company's enterprise value. And that does include impact of the company on people, planet, environment, insofar as it has an effect then on the company's enterprise value. It's a very simple example, one that Caroline uses very frequently, is kind of greenhouse gas emissions reporting is very much an impact disclosure, but it is relevant from an enterprise value perspective because investors are very much interested in that information, particularly as regulation, as taxation around emissions is introduced by governments, which will then have an enterprise value impact on that company. What we don't kind of cover is that aspect around a pure impact on people, planet, economy, where there is not a resulting effect on the enterprise value of that company. And that's where we very much see the likes of GRI as well as kind of jurisdictional requirements playing a role. Now, of course, there is kind of a clear connectivity between those pieces. One of the things that we are kind of very kind of clued up is trying to remain as consistent as we can in terms of broader reporting requirements, whether for an investor focus, whether for a wider stakeholder focus, and trying to make sure kind of requirements are aligned where they can be to reduce the reporting burden and challenge for preparers. But again, it's something we are kind of clued up on and working towards, but it is a moving piece at this point in time.
Yes, thank you very much, Sandeep. And we are launching the last poll question, which is more related to what type your organization or the market, if you are a regulator or stock exchange, need to fulfill the recommended disclosure with the exposure draft, which is very important for us in IFC and the World Bank Group, and also for ISSB in terms of to know how to ensure that the standards are implemented in the respective markets. So we got a few questions related to is there anywhere in the draft that compel the private firms to comply with the standards? So maybe Sandeep, you can tell us a little bit what is the timeline of when and we can expect ISSB standards to be formalized and a bit on the implementation side.
Sure. So on that first question specifically around kind of private companies and requirements under the standard for private companies, in line kind of with kind of IFRS accounting standards as a starting point, it is very much targeted at kind of as we see at publicly listed companies. Now the accounting standards have developed kind of specific requirements for SMEs as well, so kind of the smaller side of the market. Something we haven't at this point in time considered, but we are receiving feedback on this. In terms of application for private companies, to a large extent, a lot of this, especially for larger companies, is relevant and it could be applied by private companies. However, the reality is this is more of an implementation question at a jurisdictional level. So if as our timeline kind of pans out, we will have issued these standards by the end of the year, depending on feedback during the consultation period. There will be a specific kind of a starting date for the standards. That's something we still got to figure out. It will be then down to jurisdictions how they want to bring this into relevant regulation legislation, and in theory, it will be down to them to determine which companies are required to report under these standards. So ISSB doesn't have much of a say in that, but in theory, a jurisdiction could say we expect all listed companies to report under these standards, and we also expect certain large private companies to also be reporting. We've seen that in certain jurisdictions in relation to current TCFD reporting, for example, and so that may be one route jurisdictions going to go down. In terms of the timeline at which point this will become a requirement for companies, that again is ultimately down to jurisdictions, but we have a clear timeline in terms of issuing these standards. But similarly to financial reporting standards, that's then kind of the implementation at a jurisdiction level will be down to those jurisdictional regulators or legislators.
Thank you very much, Sandeep. And we had some questions about the wording and the use of terms. And I think this comes particularly around the use of significant and material and the consistency across the IFRS and the EU standards. So maybe you can just tell us a little bit, you touched on your last slide, like how you think about significant and material, and then the relations between the general and the climate standards, but that might be very useful to just to reiterate and explain.
Thank you. Yeah, so it is a good point. I think the frank answer is to a very large extent, this is down to management, it's down to the companies to determine. They are, of course, in the best position to understand the specific risks and opportunities they face, and so can assess what they deem to be significant. In turn, they will need to understand what investors expect and therefore what information is considered material in relation to those risks and opportunities. There will be market evolution because companies will naturally look to their peers to see what they are disclosing, and hopefully we expect that there will kind of leveling up over time in terms of the extent to kind of which the quality, extent of reporting. Nevertheless, there is an important role for regulators to play in setting expectations at the jurisdictional level. There is, of course, a role for investors to play in setting expectations in terms of the level, quantity of information that they expect, because they are, of course, the ultimate user. And there's also a real role for assurance providers to play in assuring this information to kind of enhance the credibility of reporting by companies. And just another assurance point, the International Auditing and Assurance Standards Board, the ISSB, has got sustainability assurance standards on its work program. So that's something to keep in mind as well, because they have a very important role to play in all of this.
Thank you very much, Sandeep. And you touched to a really important point, which was the assurance and verification of the information. So maybe you can share. There was a few questions related to that. So maybe you can just share a little bit about the plans on that while we are having the polls in the meantime. Thank you.
Sure. So obvious comparison is with the SSE proposal, to understand how kind of requirements around assurance. The assurance isn't within the ISSB or ISSB remit. It's not within the IFRS Foundation's remit, full stop. What we nevertheless seek to do is develop requirements for disclosure, and the expectation is those disclosures are then verifiable, are assurable. So at this point in time, we've developed these standards on kind of working towards allowing for assurance by providers down the line. But what we're really keen to hear from preparers is kind of, and especially assurance providers, actually, there's a specific question, question 1D in our survey around kind of, are these requirements going to allow for appropriate assurance? So where there are assurance challenges, we'd really be keen to hear. The other thing to point out is we are in close dialogue with the ISSB to understand kind of any assurance challenges that they see when looking at our proposed standards. And so we will be taking those on board and trying to address them before these standards are issued by the end of the year, hopefully, yeah.
Yes, thank you very much. And related to that, we see that some of the core elements from the general reporting requirements that companies are struggling with is around the metrics and targets. So this is extremely helpful, and as well as in terms of the support that the organizations or market need. There is overwhelming need for more support for more guidance and case studies to be shared with the market, and capacity building as well as showing the alignment between the different standards. So a lot of work for us for the implementation, but that is a great start, and it's a historic time in sustainability reporting, and the ISSB standards represent a significant step towards the coalescence of voluntary corporate sustainability reporting framework, and could influence the mandatory disclosure regimes around the world and in emerging markets in particular. So we keep on keep on the questions coming. We will be addressing them in the chat box and throughout the sessions as well. Sandeep will be with us for a little while, and then he has to run for another in-person presentation. So a lot of interest on the topic. And with that, we are going to move for the presentation of the climate exposure draft with Caroline Maxwell, who is the project lead on the climate standards at the ISSB and having previously played an active role in the technical readiness working group, preparing the prototype standards, including the prototype on climate standards. So Caroline, up to you to get us through the next exposure draft.
Thank you. Let me see if yeah, perfect. So just sort of before we turn our attention to the climate standard, one of the things that we sometimes show is this slide here, and it's really just to kind of talk a little bit about the context of the climate standard. So following the feedback to the trustee consultation on sustainability reporting, the ISSB were committed essentially through the strategic directions proposed by the trustees to initially focus its efforts on climate reporting, whilst working towards meeting information needs of investors on sustainability matters, which Sandeep just covered. And this is partly due to the urgent need for better information about climate. So if we then take a look at this graph, which is from the IPCC, so the Intergovernmental Panel on Climate Change, we can see the global GHG emissions from 2015 to 2050 for 4 types of modeled global pathways. And so the orange pathway is the one which is modeled based on the current, assuming that the current implementation policies are what is going to continue going forward. And based on that assumption, you get to the orange line, which is slightly terrifying. And then the purple, the green, and the blue lines are different scenarios, either where there's immediate action or there's some overshoots and then quite dramatic action to get to 2 degrees or 1.5 degrees. And for me, this demonstrates why the IFRS Foundation heard from the market that there is an urgent need for climate disclosure standards. So turning to the climate disclosure standard, so the climate disclosure standard requires information to be disclosed of significant climate-related risks and opportunities. And this builds on that distinction again that Sandeep talked about earlier, in terms of, obviously, again, we look at significant climate-related risks and opportunities to show that it is really those climate-related risks and opportunities that matter, but ultimately this is subject to materiality. And so it specifically requires disclosure of information about physical risks, which we typically talk about as either acute risks, such as flooding risks, or chronic risks, such as the risks associated with rising temperatures. We also then, the standard then also look at transition risks, which are the risks associated with the transition to a lower carbon economy, where we typically point to regulatory change as an example of that. But it's worth noting that this also includes reputational risks as well. And then finally, climate-related opportunities. And this includes both climate-related opportunities associated with climate mitigation, which is what many people typically talk about, such as renewable technology, but also climate-related opportunities that are kind of arising maybe more from an adaptation perspective, or all significant climate-related risks and opportunities. So that if you're an air conditioner manufacturer, then higher temperatures globally do actually present an opportunity to your business model. For us, this is quite an important slide. So as I just said, during the trustee consultation, one of the things we heard from the market was actually, not only should we act with urgency, but we shouldn't start from scratch. We should be building on the good work that already existed out there. And when we looked at the polling, I think that was one of the key strengths that we heard from you, was that this builds on the TCFD. So for those of you that are familiar with the TCFD recommendations or the SASB industry standards, you will see that the climate standard is quite familiar, despite being a new exposure draft. So the front end very much is consistent and building upon the TCFD. So you've got the four circles that Sandeep talked about earlier. So the governance, the strategy, the risk management, and cross-industry metrics and targets. And then the back end of the document, which is provided in an appendix, but which is nonetheless a mandatory part of the standard, then includes the industry-based disclosures, which are building on the SASB standards. And they are, again, very much the same, except from a few areas where there's been some amendments. So there's proposed changes to a subset of metrics which we seem to have or display a regional bias, and to try to internationalize those metrics. And the second is that there is now disclosures around finance and facilitated emissions in the financial sector industries. And actually, just very quickly before I actually go to the next slide, one of the reasons for why so there's two kind of driving reasons for why we heard it was so important to build on the, well, three reasons actually, to build on the work, the existing work. So one was the need to act urgently. And so to act urgently, using what's already existing is a very helpful starting point. It's also recognized among the market that a lot of work has gone into developing the material that's already out there and the experience. But also equally as important, it's helping preparers being able to pick up these standards and already have some of the processes in place to disclose and be able to disclose to the ISSB disclosure standards. And so again, it's very important for us, particularly from emerging markets, that we get feedback on whether these are materials that you're familiar with and which are helpful. So in terms of the key elements to talk about in the standard, when we do these presentations, I think we could easily talk for 3 hours about each standard. But what we try to do, so again, the climate standard follows the governance, strategy, risk management, the metrics and target slides, sections. And the governance and the risk management disclosures you'll see are very similar to what you find in the general requirements. And so we thought it was more helpful to pull out the strategy and the metrics and target section. So in the strategy, there's kind of 5 key elements to disclose on strategy, which are building on the TCFD recommendations, but we've sort of tried to help break it out for more added clarity, which includes identification of climate-related risks and opportunities over the short, medium, and long run, the value chain and business model and what's included in risks and opportunities there. It's then also strategy and decision making, which I will come back to in a moment and expand upon, because that's one of the key features I want to talk to you about. But that includes the entity's transition planning, the current and anticipated effects of climate-related risks and opportunities on the financial position, financial performance and cash flow, and finally, climate resilience. And I want to also come back to the climate resilience. But if we first look at the strategy and the decision making, the exposure draft includes quite granular disclosures about the company's climate transition planning, including its emission targets and how it's planning to achieve them. So for example, say that an entity has a net zero 2030 or 2050 target, then the standard would require you to disclose the target as part of the metrics and target section, but also how much of your target is based on emission reduction versus emission removal or carbon offsetting, and carbon offsetting. So, and if the entity is using carbon offsetting, how, some more information that allows the investors to understand sort of the carbon offsets themselves. Is it nature-based? Is it technology-based? Is this through has this been certified through a third-party certification scheme? Are there other significant factors that influence the entity's decision or the underlying assumptions on the use of carbon offsets, such as, for example, additionality or permanence? And it's very much to help enable investors to understand the entity's plans to respond to climate-related risks and opportunities, and to form a view of whether the plans are achievable. This is one of the key features we very often talk about when we do these events. And the second one is climate resilience. So the exposure draft proposed that an entity provides information about the resilience of the strategy to different climate outcomes. And one of the things, one of the things that's been spoken about a little bit, but not, so you guys have asked about the SME standards and so on, and Sandeep answered that. But I think the other thing to just highlight is in terms of proportionality, and it's not necessarily just company size, but level of maturity that a company might have in terms of climate reporting, and so on. One of the things we've tried to do in 2 of these disclosures, so the financial position, financial performance, and cash flow, and the climate resilience, is we've asked for specific requirements if the entity is able to do so. And if the entity isn't able to do so, then we've sort of got alternative disclosures that are a little bit less burdensome for the entity. So to give an example then on the climate resilience, the ask in the disclosure standard is to use climate scenario analysis if the entity is able to do so. If it is not able to do so, there are alternative disclosures, and importantly, though, the entity is also required to disclose why it isn't able to do so. So it's not really meant to provide a loophole or anything, but it's just trying to make sure that people have the time to get up to speed and being able to do what the disclosure draft ideally would want to see, or investors ideally would want to see. And actually, sorry, to just go back on the financial position, performance, and cash flow, the equivalent is that we ask entities to disclose quantitatively their either as a range or a single point the current and anticipated effect on financial position, financial performance, and cash flow. However, if the entity is unable to disclose it quantitatively, it can then disclose it qualitatively. So in terms then of the second part, which is the metrics and targets that we wanted to highlight, when we typically talk about metrics and targets, we talk about sort of 2 types of metrics. So we've got the cross-industry metric categories, which are seen as industry and sector agnostic, or basically applicable across a range of different industries and business models. And those include the greenhouse gas emissions, where the entity is required to disclose its scope 1, 2, and 3 emissions in accordance with the greenhouse gas protocol, as well as other disclosures such as transition risks, physical risks, capital deployment, internal carbon pricing, and so on. And the second part is the industry-based requirements, which, as mentioned earlier, is building on these SSE standards. And this is very much looking then at what climate-related risks and opportunities are likely to be material to an industry based on the kind of underlying business models, the activities they're likely to undertake, the resources that they use, and so on. And again, it's important to say all of this is subject to materiality, but it gives you a very good idea of what is likely to be material in terms of climate-related risks and opportunities for a specific industry. And I think that's it on climate. However, before we open up for questions, if it's okay, I will just spend 2-3 minutes on kind of next steps. So what we've tried to do, and we'll continue to do for the rest of the session, is to scratch some of the surface and be able to highlight some of the key features of the general requirements and the climate exposure draft. And you can find the standards as well as what we call invitation to comment, so a list of questions that we're seeking feedback on our website, and they're part of the same package. So if you open the draft standard, the first thing you will actually see is the list of questions that we're seeking input on. Then there is also documents that go through, which is called the basis for conclusion, which goes through some of the reasoning behind some of the disclosures. Again, we're trying to talk to you about some of those today, but if there are other disclosure requirements you look at and you think, what was their initial thinking on this, then that's a good starting point. And then in terms of other material that can be helpful, so a lot of you seemed quite seemed to highlight the fact that it was building on the TCFD. So we have a document that compares the climate exposure draft to the TCFD. We also, for those of you who might have been engaged earlier on in the process and are familiar with the prototypes that the TRWG published, there is a comparison to show what developments have happened since then. And then there's a snapshot document, which I both encourage, if you haven't read the standards, that might be a helpful starting point. Or if you have read the standards, it's still really helpful sort of reminders. It's a 16-page document that quite comprehensively lays out the standards as well as some FAQs. We have two ways that we seek sort of the feedback in two formats. So you can either submit a comment letter, which is the traditional way that the IFRS Foundation has sought feedback on the International Accounting Standards. But there's also a survey, and part of that is the hope that, you know, for some people, writing a comment letter is sort of their bread and butter. For other people, they might find it easier to respond to a survey. So that lays out some of the key questions again, and then some opportunity to provide both quite detailed, tailored feedback, but also some higher level sort of, do you broadly agree or disagree with various aspects of the proposal. You don't have to do both, just sort of either or, and this is all found on the IFRS website. And then finally, just to say, the consultation opened on the 31st of March and is open to the 29th of July, which is increasingly nearing. Well, thankfully, there's a little bit more than a month left. Following the consultation period, we will be doing comment letter analysis. We'll see about what you guys have seen. We also do take on board all the questions and the comments that you're making in this session. But the heart of what we're going to be focusing on from August to December is going to be what's in those comment letters and surveys. So please, if you do have the opportunity to answer those. And then the aim, I think Sandra touched on this already, is to issue these standards by end of 2022. However, that is very much dependent on the feedback to the consultation. So thank you very much. And then let's go to questions and polling and all of the exciting stuff we have been doing so far.
Great. Thanks so much, Caroline. I'm just going to steal back your screen if I can here. Okay, great. So great. Thanks for digging a bit deeper into the climate aspect of that. I'm going to launch a little poll here, and then while we have our poll running, which is really climate specific, I'll ask you another question. So the poll we want to ask for is particularly doing with scope 3 emissions, which is what we often get many questions about in our TCFD training sessions. And they ask us how that's going to translate to ISSB. And it's kind of one of the ways where we see a bit of a difference. So I'm just going to leave that poll if everyone wants to give us their thoughts about the scope 3 emissions. And meanwhile, I wanted to ask you about that relationship with TCFD, because there still seems to be a bit of confusion about how linked they are, how similar they are, how people are going to use these together, because we keep talking about convergence, but we're still adding acronyms. So can you just dig a little bit deeper for us and explain how you work with the TCFD?
Yeah, no, that's fine. That's fine. Let's do that. So in terms of the TCFD, as I mentioned already, the standard is very much building on the TCFD recommendations. However, you kind of go beneath the surface a little bit on what that actually means. So it really has been an invaluable resource to the foundation in many ways. So first of all, it is actually a very good starting point for a global baseline as well as a building block approach. So one of the reasons why we were building on the TCFD recommendations was, by the time the ISSB set out to draft these standards, the TCFD was had huge adoption, both in terms of voluntary adoption across the world, but actually also, you know, in regulation in some markets. And so it seemed like a very good starting point as such. And what you've seen later, of course, is that the SSE as well has built their proposals around the TCFD too. So in that sense, it provides quite a helpful sort of framework in many aspects. From our perspective in particular, we've also been incredibly fortunate because we've had, they've been able to provide us resources in terms of the Secretariat. And so from a practical perspective as well, it's not just that we've been sitting there and having a couple of sessions and work through the material. We've actually had Jeff Stem, who's is incredibly talented as part of and part of the TCFD Secretariat as part of support, and he's currently seconded to the IFRS Foundation, and so he will continue to be working with my team, in fact, as part of the climate exposure draft. So I'm very fortunate to continue to be able to work with him. And then in terms of material we use, because it's very easy to say, oh, for TCFD recommendations, and the first thing you think of is the actual sort of the pack of the disclosure sections and the recommendations and so on. But there's also quite a lot of other material out there in terms of additional guidance documents, such as there's one on metrics, targets, and transition planning, which has very much been informing those sections of the climate standard. There's also other research that has helped us inform things. So, for example, the current and anticipated effects of climate-related risks and opportunities on financial performance, position, and cash flow is one where TCFD has done quite a bit of research, looked at what investors say. So investors are very keen to hear that information. For them, it's a very critical component. I think it's something like 97% of investors were like, this is great, we want to see more of that. But then when you looked at how many people had, how many entities had been able to start disclosing that, bearing in mind, of course, that TCFD is a voluntary framework, it was very low, something like 15 or 20%, and please don't quote me on the number specifically, but something like that. And so that was one of the ways we started looking at, well, how can we thread the needle with making sure that the investors get that information, and yet we can't really ignore the fact that companies might not be able to do this already. And that's how we got the unable to do so language into the standard. So hopefully, Tiffany, this answers your question.
Yeah, that's great. Thanks. And I'm just going to highlight, because Mary Jo did rightfully point out we haven't defined what scope 3 is. So for anyone who's unsure about the 3 scopes, we're really talking about the value chain here, which makes it a bit more complicated, right? It's kind of outside of our hands. So it depends on others also reporting on their emissions. So scope 3 is that value chain emissions that we were talking about. Okay, I'm just going to close that poll here and just share with everyone the results, which it seems like a lot of people do believe, 70% do believe that there needs a bit of a different timeline in emerging markets, which I think is probably something that's well understood and something that IFC then can take into their consultation feedback as well. And I'm going to share also with everyone, you can use this QR code or go to menti.com and enter this code 59476307, and we have a few more questions for you all there, and I'll let you all as you wish if you want to fill out those questions for us. We just have 2 up there, and in the meantime, while anyone who wants to fill out those questions does, I'm going to ask a couple more, if I may, of you, since we have a great expert here, Caroline. So we had a few people talking about kind of more kind of very direct instructions telling us exactly what to do in each company. And I think you have this really difficult balance between trying to make sure that we're ensuring companies are looking at this holistically as an organization. They know their company better than anyone else, but also being very prescriptive as to what's being required. So one particular question someone asked was that they felt there would be a need for really kind of prescriptive scenario so that everybody's using the same scenario analysis. How are you tackling that?
A really good question. And the first thing to say is, again, we're open for feedback, and it's one that's on our radar in particular. And we're talking to different, just for current context, and then I'll go back and talk a little bit about how we're thinking about it. But in terms of the work that we're currently doing, is we're talking to various different initiatives that have looked at the benefits and the drawbacks of prescriptive scenario analysis. So again, it's very much on our radar in terms of current thinking, and I think you summarized this quite well. It's a really tricky balance to strike. So if you look at prescriptive scenario analysis, one of the challenges that we're facing is investors want to know about how the entity has been thinking about different climate-related scenarios and outcomes to test the resilience of that entity. And that's going to vary. So what is a relevant scenario or time frame for you to test is not going to look the same across industries, and not necessarily even the same companies. And so it's a constant battle in a lot of these disclosures between making sure that we have comparable and consistent disclosures, which is very much at the heart of what we're seeking to do, but also making sure that investors get information that's also relevant to understand the entity itself, and actually also for entities to be able to tell their story. Whatever you see going forward as well, I think it's going to be trying to at least provide the transparency. So another good example there is carbon offsetting, where there's a lot of different views on what we should and shouldn't count as carbon offsets. And the IFRS Foundation's view is essentially that companies, entities should, we can't as an organization talk about whether you should or shouldn't use carbon offsets and what's a good carbon offset versus bad. Like that's not in our remit. But similarly to scenario analysis, and why I'm using this as an example is we can provide as much transparency as we can do in order to make sure that the investors can make the right assessment. So in the case of carbon offset, there's a long list of things that we hope will help investors, and this is again based on research, understand and dialogue, understand whether they view those carbon offsets as a credible path of the entity's climate transition, if that's something that they're interested in. And similarly on climate scenario analysis, I mean, again, this is subject to consultation and talking, but at the minimum, I think we need to make sure that there is transparency and an ability for investors to understand what's gone into those scenario analysis, so that they can at least make it their own assessments and also see how comparable or not comparable that is to other entities.
Great, thanks so much. I know I'm out of time. I have one more question for you, but I'll just quickly share these results. Thanks for everyone who's participated. It looks like a lot of support is needed across the charts, but just to highlight our top ones here, in financial impact assessment and new risks and opportunities seem to be quite high, which I guess is a good thing because there's already a lot of guidance. So I feel like as we build more experience, that will increase as well. And then we also have at the bottom setting targets and systems to collect data. So we'll share all of this with you later. And then we also had one more question here, which was, what do you believe is the main barrier? So some of the barriers that we're finding here is capacity, availability of data, lack of training, governance and leadership. So I appreciate everyone who's contributed this information. We have a lot to go through here, but we'll make sure that we're acting on this and providing as much information as we can. And maybe if I can just really briefly take one more minute of Chuck's time, who's closing us out. You started with climate. What's next with the kind of thematic route, or where we're going to see next?
Yes, that's a great final question. And actually, if I'd thought about it, I could have covered some of that in the next steps and call to action. So the answer is that the ISSB, just like ISSB, will have to issue an agenda consultation. And what that simply means is asking the market for what is next. Is sort of the simple way of explaining that. And the work on what will be included in the agenda consultation is currently ongoing and based on, again, the existing material standard setters, some of the projects that you will have seen come out from the ISSB already. But what I could say about it specifically is that the first board meeting that the ISSB is going to have is happening in July. I think it's the 18th of July. Let me just very quickly see if I can check that. It's the 18th or 19th of July. And I think the that week, and then I think the public sessions is either the 20th or 21st, but that's common. It's very, TBC, but a part of that agenda is going to be the agenda consultation. So what the ISSB are going to ask for next? It's public. That discussion session, as if people are particularly interested, I encourage you to actually listen in. And again, I shouldn't speak on behalf of my colleagues who might have different thoughts, but one of the things that we're hoping for in the public board sessions that we have in July is also for you guys to watch and make sure that we're accountable. And if there's something that you see are missing as part of that, either the agenda consultation or more broadly, the standards which we are consulting on at the moment, please use that opportunity to again reach out to us. Sorry, I know that was a longer
Great.
answer than you needed.
No, that was perfect. Thanks so much, Caroline. And thanks to you both, you and Sundeep, for joining us. I'm going to pass over to Chuck now to close us out. Thanks so much, Chuck.
Well, I have the arduous task of closing us out in about 6 minutes. But what I think is interesting, and this is, my experience of working in accounting reform in emerging markets starting in the early 90s, I'm seeing a lot of the same issues here with sustainability reporting. And I thought that I would go through some of the general themes that I've heard throughout the discussion, and also we have a couple poll questions. One thing that was a recurring theme in the questions, and I was monitoring the chat and on the online questions, is the need for alignment between TCFD and the EU. And I think that's been addressed somewhat because TCFD is definitely one of the building blocks of the standards. And I do think that the SSB will eventually visit the issue of double materiality. And then on the implementation, that's something I saw a lot of. And Tiffany, would you mind showing the first poll question that I have?
Yeah, it's running right now.
Oh, great. So this gets to what aspect of the exposure drafts are the most challenging for your organization. And it's really the how-to of the content or how to collect the information, and both, which is really content and implementation. And I think I'll stop the poll right now. And it's the response is really both. The content and the implementation is going to be the biggest challenge. And related to this, some of the things that I heard throughout and read throughout in monitoring the questions and answers is really this gets to competency interpretations that are guidance. One thing to note is with the accounting standards implementation, one thing that the IFRS Foundation established was an interpretations committee. And often those interpretations can really help preparers of financial statements interpret the standards and implement that. And I think we would hope that similar interpretations and guidance will be promulgated by the SSB. And then let's go to the next question as well. And the question here is, do we think that companies in emerging markets will be able to easily apply the standards as is? And I'm seeing a very high percentage coming out for the SME version. And as an investor and as somebody who conducts corporate governance diligence and looks at financial reporting in emerging markets, we found great value for a lot of our clients to utilize the IFRS for SMEs. And it looks like there is a call for perhaps consideration of a SME version for the sustainability standards. And I think right there, we're running at about 90% for an SME version and 11% as is. And I do think that this bears consideration. So with that, I'm going to close. We're coming up on time. And just some last things. I'd like to thank all of the speakers and as well as the organization, the IFRS Foundation, the Sustainability Standards Board. Thank you so much for being here. Your participation and willingness to speak to emerging market companies and regulators and market participants is extremely helpful, and we appreciate your acknowledging that stakeholder. I'd like to thank all of the participants. There was really some great feedback, questions, and also the pre-conference questions were also very useful. I know that IFC and the World Bank Group will definitely plan on incorporating many of the comments and questions and the responses that we've heard today in our commentary on the standards. And lastly, one of my favorite sayings is that the future is history. And, you know, as somebody who worked with IFRS implementation, even back when it was called IAS in the early 90s, it took a long time to converge accounting standards globally into what are now the IFRS financial reporting standards. I mean, the predecessor to the IFRS Foundation was the ISSE, and that was formed in the early 70s. And it really took to the late 90s, turn of the century before we had any real convergence of accounting standards. So what the ISSB is really trying to accomplish here is a great feat. I mean, the convergence of sustainability reporting standards in about a 10th or less than a 10th of the time that we had for accounting standards is really a great feat. But we all know the urgency of climate change and of sustainability is a very, very important topic. And I would congratulate the ISSB on its efforts, as well as the implementers and those who provide assistance to companies such as the UN, SSE, UNTAD, and others. So, and also to all of you, you all have a tough task ahead, and we commend you for your participation and commitment to this. Thank you very much. So everybody have a good day, and thank you all.